The Excess Select Guarded Fund of Funds, Quarter 3 Commentary. The Excess Select Guarded Fund of Funds is made up of the Coronation Balanced Defensive Fund, the Nedgroup Stable Fund managed by Ford Asset Management, the Prudential Inflation Plus Fund, Allan Gray Stable Fund, and the Nedgroup Core Guarded Fund managed by Tequanta, which is a passively managed portfolio. For Quarter 3 2019, the fund was up 1.5%. Year to date, the fund is up 7.5%, and over the last 1 year, the fund is up 4.1% as at the end of September. In terms of asset allocation across the portfolio is currently 20.9% exposed to domestic equities, 6.2% domestic property, and 45.1% to domestic fixed interest. It has 18.7% foreign equity, 0.7% of foreign property, and 8.5% foreign fixed interest. In total, we thus have 28% direct foreign exposure with a further 11% in rand hedges. This gives the fund about 40% exposure to offshore markets. The RSA R186 bond at 6.2%, Naspers at 1.7%, and British American Tobacco at 1.4% make up three of the larger holdings within the portfolio. If we look at the performance year-to-date of the underlying funds, the best performing fund so far has been the Nedgroup Stable Fund, up 8.8%, followed by Coronation, up 8.1%, and the Nedgroup Core Guarded Passively Managed Fund, up 7.1%, followed by Prudential Inflation Plus, up 6.3%, and Allan Gray, up 5.3%. What were the positive contributors this quarter? Firstly, the foreign exposure at close to the regulated maximum of 30% made a meaningful contribution as the rand weakened 8% to the US dollar and global equity markets outperformed the domestic markets. The New Gold ETF, up 13%, benefited from the risk-off environment, increasing investors' demand for safe haven assets. Defensive rand hedges, British American Tobacco up 14%, Reinet up 22%, and Anheuser-Busch up 16% performed well due to the weaker rand as well as company-specific actions well received by the market. Detractors this quarter, Sasol down negative 28%, delayed the release of financial results on both the 16th of August and the 6th of September, citing the need for more time to conclude their investigation into the budget overrun and delays at the Lake Charles chemical project. RMB Holdings down 9%, Standard Bank down 9%, First Rand down 7%, all performed in line with the financial sector that was down negative 7%, as the market continues to price in a challenging environment for South African-focused stocks. Domestic property stocks and inflation-linked bonds, as well as emerging market equities, were also weak during this quarter.